These are 3 secret methods or strategies to scalp the 1 minute time frame that I learned after 7 years of trading. Let's start. So the first method is one of the easiest, and this could be a whole trading plan. Now it consists of 3 parts, but if you only take the 2 first parts, that's going to be a full trading plan by itself. And why? Because W to S is going to equal to make you identify high probability range, and a high probability range is the base of a trading plan. So when you have this, then you have a full trading plan. But now we're going to be adding another element to the trading plan, which is going to make us feel like, okay, we're catching a much more sniper entries, much more defined entries, and not just, ones with wide stop loss. So WSW, that's the first pattern that we're going to be looking at, and it's going to be focusing on one time frame. So that means we're going to be only looking at 1 minute time frame and no other time frame. The first thing we're going to be looking at is W and then S. So let's focus on these first 2. That means I want to see weakness. So if I have a key level here or no key level, but we always want to focus on key levels, prices reacting and having weakness at a key level, prices going up, and then we have some weakness here. That means weakness is the first sign of price reversing. We don't have the confirmation yet, but the moment we have weakness, there is a potential of price reversing. Now we have the weakness. After that, I want to see strength. So if this is the weakness, and after that, we have the strength. Strength is price confirming that we have the direction, that we have the reversal happening. Weakness could be just failing to close above. That's the easiest way to understand it. It could be also presented in too many different ways depending on your trading plan. So your trading plan could have that specific weakness and specific strength. In general terms, I would say weakness is kind of failing to close or having some weakness at highs or lows. And then strength is a breaker structure. And in other words, closing and displacement below or above highs and lows. Okay. So the moment we have the specific pattern, which is the W to S, then we want to have another weakness inside of this range from here to here. So as price goes up, I want to see weakness here in order to look for the continuation. So think about price is always doing this specific sequence: weakness, strength, and then weakness, which you can enter from, and then strength, which you can enter from, and it continues like this. If you notice here, based on the price action that I'm going to have here, so we have weakness, strength, and then weakness, and then strength, and then weakness and strength, and then when the market shifts, we also have that specific sequence. So simply on the 1 minute time frame, all I want to see is a WSW. This last W is gonna be, and I really prefer to see it if you want to have the best entry, it's gonna be based on the second pullback, and I have a full video on this. I'll have it on the description. So based on the second pullback, we're gonna be entering here. That's how it looks. So simply you want to look for this specific pattern, and I do really prefer to trade in either lender session or New York session or Asia session, but not when the day is almost ending or when the day is just starting. Now, before we continue, just a quick thing. Everything I've learned over the last 7 years, the frameworks, the system, the way I read the market, it's all inside my community, Edge School. That includes the Edge model, the same strategy I use to find those 5-to-1, 10-to-1, sometime even 20-to-1 reward to risk trades. And I take those trades live with the community. If you want to learn the full system that I use and trade like me, there is a link in the description with all the details. If you're not ready yet, no worries. Let's continue today's lesson. Now look at this, and then we're going to look at the examples and compare this with the examples. Okay, you can take a screenshot of this. Now take a look at here. We have Asia session. You could start off anywhere. So I could look for some examples here, but we're going to be starting from here. Look at this. We have kind of a weakness here because what happened is price going above. Now, when it comes to the 1 minute time frame, you don't want to look for, zoom out a lot and then look at the structure here. You want to focus on the current structure. That's what scalping is about. We don't need to go all the way back there. We can use this on the other methods. Now, focus on this. We have kind of a weakness here, not too clear. We have price going lower, and then also here we have weakness, and then we have strength here. So take a look at that sequence. You could consider this weakness and strength, weakness and strength here. Now we have this imbalance here, and then price is very close to the imbalance, not there, and we don't have a high that is inside here. But I can always consider this, I could consider this as a high. Take a look at here. Price failed to displace above and then close lower. Now, at this specific candle here, what I want to see is price failing to close and then closure on the other direction. I can take the high, fail to close above, and then close lower, and I can enter based on the opposite color candle. But take a look at here. You have this big candle. Probably I'm not going to enter based on this because the candle is way too big, and if I enter here and stop loss just slightly above it, that's going to take a lot of the reward to risk. But take a look at the first pullback that is inside of the imbalance. Now this is the first pullback. Second pullback inside the imbalance is here, and the candle that takes this is bearish candle that did not displace above and close lower. You can enter based on this. So we have two sequences. The first sequence is candle that is bullish closing below this, and then a bearish candle closing lower, or simply a bearish candle that takes the high and goes lower. Now in this case, we can have a stop loss above, and take a look at this. Gives you 3 to 1 easily here, and then more to 7 to 1, and actually way more. Okay, so that is a huge trade. Not telling you that you're going to be holding all the way down here, but just the potential. Now take a look at here. We have weakness, we have strength. So this is the sequence, right? Then we wait for the second pullback. So first pullback is here, and you always want to focus also in the gap. So this is a huge gap here. Usually I want to see price coming back here. Okay, but take a look at here. We have price closing above, so there is no weakness. We always want to focus on gaps. Now probably you could have also an entry here, because we do have first pullback, taking this and then selling here. So you could have a stop loss above, maybe takes you out unless you have it slightly above. Use ATR here. If you have it exactly at the high, then you're stopped out. But if you have it slightly above, you know, covering some areas, then you could survive this. But the best entry is going to be here. But there is another entry, which is pullback, taking the high, closing lower. That is part of the structure, even better than this one. Selling here, stop loss above, and that is another trade that is pushing to the downside. Now you want to identify the same sequence. Where do we have the same sequence? Actually, there is one here that I might enter based on. So we have this high inside of this range. After weakness, after strength here, we have high, taken, close lower. We can take this one here, but there's another one that is even better, which is weakness. The strength here is not that obvious, but we're still inside of this range that is going to the downside. And there is no clear breakout structure here, but I take this actually a lot of times. So we have first pullback inside an imbalance, and then price not displacing above, closing lower. Entering based on this candle, stop loss above, another opportunity to sell. Now you could apply this anywhere. You can go to a New York session here, weakness, going up. We have first pullback here after the strength, but no entry. But inside of here, we have a pullback, taking that pullback, this new one here, the lowest one in the range, failing to close. That is what? Weakness. Closing higher, that is our entry. Now I'm explaining the textbook example and the other examples that are more complex in order to give you different scenarios and different situations. But you can take this, apply to your trading plan. Now you can apply this here. So if you notice, weakness, strength, pullback, and we have an imbalance here. And take a look at this, a low, and that's the first pullback. Second pullback comes here, takes the low and close higher. That is another trade. Stop loss goes below it, and you get your 3 to 1 and then a 5 to 1. So that is the first method. Very easy. We look for the sequence of WSW, weakness, strength, weakness, and we go from there. Now, the second method is based on the CCT, and this is something that I've been teaching before anyone else on YouTube, saying that they invented this. Now, CCT is what? Simply finding the direction of the next candle based on the previous candle. That's it. So you need 2 candles. Now, the more you use, the more context that you have, but the minimum is 2. And you can actually have a bias and have a direction based on this and have trades. So we have 2 types, and here we're going to be using 2 time frames. Now, the first type is a reversal. So we have a bullish candle. Depending on where price opens, around the opening price, what happened after, we can take a reversal trade. So if we have weakness here, we can look for a reversal. We can look for shorts after the bullish candle. In a continuation, below the opening price, we're going to be buying, and we're anticipating that price is going to continue on the same direction. Now we're going to be using, just for this video, because I do have a full course on Edge School regarding the CCT, but for this video, I'm going to show you a very easy way to use this and scalp on the 1 minute time frame. So the first time frame that we're going to be using is the 15-minute. Because we're going to be using two time frames, that means we need time frame alignment. So we're going to be looking at what? 15-minute time frame, and then we're going to be just trading the next candle. If I'm looking at Asia here and then London, as I said in my other videos and on the secret videos, I mean, we have the method of the midnight. So midnight is here, and then 17 is here. Below both, we actually look for longs, right? And we can see that there is some weakness here. So we got some weakness at this candle here, and after that we close bullish. Whenever we have this, we have candles going lower and then we close bullish, and there is weakness around this, we look for continuation to the upside. So now we have this candle closing bullish. Now the same way as this candle closed bearish, after that we go bearish, after that we go bearish and bearish. We're going to be using this bullish candle here in order to look for continuation to the upside. So the opening price is here. We're going to be looking at the 1 minute time frame. Now playing the price action. All I want to see is price. I mean, I really prefer to see weakness inside of here, but just going below and then closing higher could be an entry, okay? Because we close above and we have a wick to the downside. Now, this might not be too clear for you, but you need to understand the premise of CCT. I mean, we could have an entry here, but I said I want to see a pullback, and this is a valid key level to look for entry from. And then stop loss goes below and price goes higher after that based on what? The CCT. Now, 15-minute time frame again. You want to look for price going up into a key level or after weakness and then closing bearish. We can look for the continuation. Take a look at this here. If you notice, what do we have? This bearish candle here did two things. First of all, there is weakness here and it closed bearish. So we could have a bias to the downside because this one has weakness and the direction of it is bearish, looking for continuation around the opening price. So what I want to see on the 1 minute time frame is price going above the opening price and then go lower, and I could sell here. Now let's look at the 1 minute time frame here. So what I want to see now is price going up, giving me an entry, a valid entry. We could use the weakness and strength. We could use a lower time frame entry. We could just use an engulfing candle. Okay, so playing the price action, this is what I want to see. Price going up, giving me a valid entry. Okay, so as you notice, price is going up, still going up, and now we have price reacting of a key level, not exactly from there, you know, but we have price going lower. Now because we're entering on the first pullback, so that is the first pullback, you want to have an entry here at this engulfing candle, because what this engulfing candle does is tells us that there is an alignment now between the CCT framework that we have with the lower time frame entry model. Now, because we're entering on the first pullback, you want to have a stop loss at the high. But if you were entering at the second pullback, so if this happened, you can enter here with a stop loss just above the second pullback, because that's what we learned earlier. So stop loss goes above, that is one entry. Okay, price goes up, so still not into the stop loss. I mean, even here we have some weakness. So we have a high taken, okay, and then closing lower. Okay, closing lower, so that is a good one. I actually expected this level to be filled, and then price goes lower. Now notice what happened on the 15-minute. 15-minute was we close lower, we go up above the opening price, and then we go lower and we continue lower. Now you could also trade based on this. You could trade based on the next candle. As long as we are having kind of a direction based on the candle and price is not too overextended, then we can look for continuation. So playing the price action, you can notice price goes all the way down there, and that is another 5 to 1. For example, you could look at price going lower, weakness here, that is internal. Now this happened where? Here we have price taking a high, so weakness, closing lower. We can trade after this above the opening price. We saw somewhere in here, and we look for the continuation. Same thing, we have weakness here, okay, and then not clear weakness, but a rejection of a fair value gap or imbalance. We have a bearish candle, we just sell above that opening price around here, and we look for continuation to the downside. So based on CCT, that is how we trade. Now the third method is going to be the rectangle method, and you already know this, okay, but some of you don't. So if you're not familiar with this, and there is some videos that I'm going to leave on the description that's going to explain all of this, plus using two methods at the same time. So we could use the second pullback pattern with the rectangle method, and I do have a video on this. So rectangle method is going to be finding weakness, but instead of looking for strength, based on breaker structure. I mean, the rectangle itself is going to be based on strength, but it's much simpler, okay? So we're going to be looking for weakness, and after that, we're going to just be drawing one rectangle. That's going to give us the entry, the take profit, and then the stop loss. So we have weakness. We're not being able to displace below. After that, we're just going to be drawing the rectangle. The rectangle is going to go from the closing price of this candle to the low of it, and that's going to be a rectangle. It's going to be using two time frames. The higher time frame is going to be the main one you're going to be using here, and then the lower time frame, okay, is going to be inside the rectangle. The entry is going to be one candle on the lower time frame closing above the rectangle. So if one candle after this candle closing, if one candle closes above the rectangle, that is our entry. For example, here we can see that this is a bullish candle, but it caused a weakness here. There is some weakness here. And another example is this one. Even though this is a bullish candle, but it has weakness. That means weakness, even in a bullish candle, is the first sign of a reversal. So think about it as wick. Wick is the first sign of a reversal. After that, we have a complete reversal. Same thing here. A wick or weakness is the first sign of a reversal. After that, you notice price just goes to the downside. And same thing here. So you can notice here, takes the high and then reversal after. And this continues the same. So we always have the same, even against the trend. So even if you're trading against the trend, still gives a reaction, goes lower, and continue on the same direction. So let's take a look at these two here. So first one is this. What do we have now? We have weakness, then we draw the rectangle. Now we are in the 15-minute. We draw the rectangle, we go to the 1 minute time frame. Simply, especially because this is a small price action here, or a small wick. If price closes below, we enter immediately. If the wick is too big, so if the wick is like this, and we're closing around here, here, and we just immediately close lower, you either could trade here and have a stop loss all the way above, or wait for a retracement inside the range here, and then wait for alignment, and then sell here, going lower. Okay, because the range is too big, price could actually retrace deeply inside. So that's one way to apply it. So now, because the range is too small, then we're going to be looking just for one candle to close lower. This candle close lower, we have an entry here immediately, and stop loss goes above the rectangle. And take a look at this magic here. Price goes lower. That is how we do it. Now go to the 15-minute time frame and notice how actually this one, I think it continues lower. So it goes actually much more. Now take a look at this one here. Simply. Now this wick here is a bit bigger than the one that we had earlier. So we go to the 1 minute time frame, and what I want to see is a closure below this. But I really prefer to see price going above first, okay, into a key level. If I see that price is respecting one of the key levels here or here, I could sell immediately, especially if I have an engulfing candle. Now the closure here, I could enter based on this, but the stop loss needs to go above the rectangle. And notice how big it is. Now you can enter based on this. So this could be your first entry here. Now let's see, price goes up. I want to see, because this is now the first pullback, you could also use the weakness here. So price goes inside, okay? And then kind of find weakness around that level and close lower. So we can have an entry here. And still stop loss, actually because we looking at the second pullback, I could have a stop loss not at the rectangle, just slightly above this, because there's some other key levels that price did not go to. So notice what happened here. Okay, that's what I was afraid of actually. Okay, so price stays there a bit over time. Yeah, I did not know exactly where price is going to go to, but based on the trading plan, this could be a good entry. Another re-entry could be also here. Going back to the 15-minute to make this faster, let's see what happened after. And then a huge drop to the downside. Going back to the 1 minute, that is the trade you caught, 7-1. The other trade is around 3-1. So both of these are valid trades, and that's how you trade based on the rectangle method. It's very easy, much easier than the other ways, because this one could be way too mechanical. The only discretion that you're going to be using here is identifying the valid highs and lows, and it's all about mastery. So that's it for today's video. If you want to learn more, then check out It's Cool, my community, to learn my trading strategy, to trade with me live, and to have access to the courses that I have. Hit the like button, leave a comment if you enjoyed the video, share the video with your friends, and I'll see you next one.